I have been in the hedge fund industry for 30 odd years now. I've both sold to hedge funds. Many of my friends are hedge funds. I've run a hedge fund. And so they're dear to my heart. I even have an asset management company called Exponential Age Asset Management, XPAM, which invests in crypto hedge funds. You see, my thesis, it's a fund of funds. My thesis is that if you really want to capture the performance of this space in crypto as it goes from $2 trillion to $100 trillion, you're not going to get it all by being just in Bitcoin, Ethereum, or Solana.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In today's video, Raoul Pal takes us under the hood of crypto hedge funds and digital asset market makers.
You're going to have to figure out what the next big breakouts are, where the big gains can be made, where's the next 100x. And that is incredibly complicated with the thousands of tokens that exist and tens of thousands of memes and all the other stuff in the space. You kind of need to rent it to experts. And these hedge funds are the experts. Now, what's interesting about the hedge fund industry in crypto for me is it's incredibly small. Versus the VC industry, it's about a fifth or less of the size, maybe a tenth of the size of the VC industry. There's actually not a lot of secondary market professional participants in crypto, which makes it very, very inefficient, which means it can be very profitable. So hedge funds can make supernormal returns. They focus all day, every day, 24 hours a day, 7 days a week, because it's crypto, on doing this. In traditional markets, there's about $4 trillion in hedge funds. In crypto market, it's about $10 billion, i.e. nothing. The big players who push prices around, some people would say the more manipulative players, tend to be the kind of private trading shops out of Asia. They're very big in the space. Then there's the market-making firms, people like, Jump Capital, who are now moving out of the space. But there are other market-making firms. And then there's some hedge funds, but a lot of retail. As retail investors, we got to front-run a lot of the money coming into the space, and that's been the gift that keeps on giving in crypto, is being ahead of Wall Street for once. But there is a group of hedge fund managers who really are fabulous because they understand this market. It's super depth. Their job is to find the big trades. And one of my favorite managers, and as a disclosure, XPAM is invested in DACM, Richard Galvin's firm, is Richard Galvin. He grew up as a TMT analyst over the tech years. He understands the technology deeply, and he runs a very large hedge fund in the space, but he's also just a brilliant thinker. And I love to sit down with Richard from time to time, pick his brains where we are, what's going on, and what we should think about. So I really hope you enjoy this conversation with Richard Galvin. Now, before you go,
Donald Trump Jr. has announced plans to launch a new decentralized finance, DeFi, cryptocurrency platform to address inequality in banking access. However, the platform is still in the early stages and will take some time to become a reality. During a Q&A session on subscription-based platform, Locals on August 8, Donald Trump Jr., the eldest son of presidential candidate and former President Donald Trump, said he wasn't launching a memecoin, but working on a crypto platform to take on the banks. What we're talking about is a larger type of platform. That's very different, and not a memecoin, he said. However, he added that it would be a long time before we can do anything, not giving anything away on a time frame. Trump Jr. didn't provide much more detail on the platform, but emphasized that it would target the banking system. What we want to do is take on a lot of the banking world. I think there has been a lot of inequality in that only certain people can get financing, so this notion of decentralized finance is obviously very appealing to guys like me who have been debanked. Rumors around a new crypto offering began circling after Trump mentioned DeFi in an August 7X post, with many believing it may be related to a new memecoin launch. We're about to shake up the crypto world with something huge. Decentralized finance is the future. Don't get left behind, he said. His brother, Eric Trump, said something similar on X on the same day. I have truly fallen in love with crypto/DeFi. Stay tuned for a big announcement. At the Q&A, he also addressed rumors regarding the Restore the Republic (RTR) memecoin, which had surged and crashed amid false rumors of association with the Trump family. Eric Trump also recently denied any connection with the memecoin, calling the rumors absolutely false in an August X post, which sent the RTR token crashing over 70%. Trump Jr. made a similar warning in an X post on August 8, saying, I love how much the crypto community is embracing Trump. It's absolutely incredible, but beware of fake tokens claiming to be part of the Trump project. The only official project will be announced directly by us, and it will be fair for everyone.
Yeah, I think one of the interesting things we've kind of seen, this is probably the second or third time crypto's kind of acted a little bit like a canary in the coal mine. So, as you mentioned, crypto's been weak for, for the last 6 or 7 weeks. Right? So it's kind of in a way been ahead of what we've seen over the last 24 hours in traditional markets. And to be honest, we kind of saw this back in 2022 as well, where crypto was kind of weak. Well, before we saw traditional markets kind of fall over. I think we've been in, and we can talk a little bit about this later on as well. I think putting aside the sort of the short-term market factors we could talk about. Also, I think there's been some structural issues in crypto over the last 6 to 12 months, and we've got a substantial mismatch between the capital that's in the pre-listing or VC market versus the capital that's in the listed market, and we've seen that play out particularly around the altcoin space. And then on top of that, you've seen the ETF launches, which has driven critical capital inflows, but very much focused at that Bitcoin and now on the Ethereum level. And then at the other end of the barbell, you've got the meme coin kind of mania. So you're in you've seen some pretty different sort of structural flows in the way the capital's been allocated across crypto that we've seen probably in the last sort of 6 years before that.
So let's talk about just how you're navigating the current volatility, because you've been through plenty of volatility in the past. You're a long-only guy, so, this is all part of the game. You come in you're looking like we all were over the weekend and everything turns to shit. What do you do? How do you think about it? What discussions do you have internally?
Yeah, I think we've found that we've been rewarded over the journey for being patient. And I think the crypto market, one thing it definitely doesn't have is patience. So we generally try to stick to kind of our knitting through these sorts of periods and make sure we battle test the portfolio and everything that we own, continue to sort of test that we own it for the right reasons. And clearly owning assets in this market for momentum-based reasons when something like this happens can be a disaster. So we're very much focused around what we see as that sort of fundamental end of the crypto market. Assets that we see can ride through this volatility and prosper on the other side. And I guess a period like this is just a chance for us to sort of retest the thesis on what we own and retest the data and the data and the statistics we follow to sort of get an update on the assets and check that everything's still in line with what we think. And then really our approach has been long only, and we're 80% plus long in our liquid strategies through these periods, is then just to hold our nerve. Now, we've found through the journey, crypto, the biggest mistakes people make in crypto generally happen right at the top of the market or right at the bottom of the market. So we're very disciplined on making sure that we don't panic in these types of periods, just like we try not to get too euphoric on the other side of the coin as well when things go our way. I've found sort of over these sort of 6 to 7 years, that's the period where you've really got to focus and stick to your strategy in your allocation process and make sure you don't deviate from that. Because it's hard not to get caught up in this.
Bitcoin has now recovered around 25% from its dump to $49,800 on Monday, following a bout of dip buying, and is on track for recovery back to its range-bound channel and accumulation zone. Crypto founder Benjamin Cowen said that Bitcoin would rally into its death cross. The forecast is now materialized, and the bearish technical signal is in the past, for now. A death cross is a technical analysis indicator that shows a short-term moving average falling below a longer-term moving average, usually a 50-day and a 200-day. It is often the signal of a bearish trend reversal, but that is not always the case. Cowen observed that in 2023, BTC started its rally just after the death cross. It then got above its 50-day SMA, simple moving average, and subsequently held it as support before going higher, he added. However, in 2022, there was a small rally into the death cross, but it faded after the chart pattern occurred. The analyst concluded that Bitcoin would have to hold above support at $62,000 for the move upwards to be sustained. However, the asset has since retraced below that level. The durability of this move will likely depend on first BTC getting above its 50 DSNA, $62,000, and then holding it as support like it did in 2023. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.